Good morning and welcome everyone to the Moneycontrol live stream. You're watching the opening bell and I'm your host Nickey Mirchandani. Well, Indian equity markets are poised for a third consecutive session of positivity or optimism coming in on the street. SGX Nifty at this point of time is hinting to a positive start for domestic market. Nasdaq and S&P 500 closed at 13 months high and US CPI report rose 4%, the smallest in more than 2 years, showing almost slowing down from April's 4.9% growth out there. All eyes now will be on Fed meet outcome today. 91% odd of pause out there, amount of optimism building in on account of that, and Asian shares are up. Dollars wobbly as US inflation data has reinforced Fed pause bets belief. If you talk about FIIs, they've again bought shares. Now that's after a 2 consecutive days of sell-off out there, and they've bought in equities with some quantum out there. 1,677 odd crore FII and DII. Talk about that. That sold shares to a minuscule amount of around 203 odd crore back home. Small and mid-cap party may continue. FNOQs out there, well, 84 stocks have seen long build-up based on the OI percentages, which include Tata Communication, Oracle Finance, Dixon, Cummins, and Astral. These are some of them, and there are 14 stocks which have seen long unwinding, and these include the likes of Delta Corp, Hindustan Aeronautic, HCL Technology, Bharti Airtel, and India Cements out there. 20 stocks that have seen short build-ups. Again, this is based on OI percentages out there, and this includes the like of Interglobe Aviation, Container Corp, State Bank of India, United Breweries, and Federal Bank. Well, 72 stocks have seen short covering. That's a big number coming in on that one, but these includes the like of Atul, Persistent System, JK Cement, Intellect, Design Arena, and Havells India. Also, let's talk about stocks that are under FNO ban on NSE. This includes what has been added is BHEL and Manapurna Finance, which has been added freshly to the FNO ban list. And what has been retained is Delta Corp, India Energy Exchange, and India Cements, Indiabull Housing Finance. These are some of the list, stocks that have made it to the FNO ban list out there. So these are some of the counters that we'd be keeping a close eye out on. But let us get going and discuss some stocks and strategies now with Rajesh Palviya, Senior Vice President Research, Head Technicals and Derivatives at Axis Securities. Good morning there.
Yeah, good morning, Nickey.
I'm going to start off by asking you about your assessment on the markets and the strategies you think viewers should be undertaking at this point of time. FOMC meeting, you think some amount of caution should set in. Markets have been, last 2-3 consecutive sessions have been rather good for markets. You think, it's a good strategy now for the viewers and the market participants to square off, take their profits on the table, and then decide what they want to do after some tone has been set by the FOMC meeting out there?
So, a market is at a very interesting juncture at this moment. Bank Nifty is enjoying all-time high trajectory. Nifty is almost near to all-time high, just 150 point away from all-time high trajectory. And we have very important meeting of FOMC today night, and that outcome is going to give a big trigger for market, how they are coming up with their outcome. If nothing comes on the negative side, then yes, surely we are going to hit a new all-time high in this continuation of this uptrend, which we are witnessing in the Nifty since last couple of weeks. So looking at the data setup, we do have a bullish view on the market. In the previous session, we have witnessed call writers have covered their position for 18,700, 18,600 strikes. So all these strikes have witnessed short covering action, and Nifty is as trading almost near to 18,700. If we able to hold and sustain above 18,700, then one round of short covering can be there in the market, and possibly Nifty can inch up further higher towards 18,800, 850 zone in this up move which we are seeing. So buy on dip should be your strategy for Bank Nifty, and your stop losses at the current juncture should be around 18,600 should be your stop loss to hold your long position on the Nifty, and possibly target is 18,800.
Okay, so 18,800 is the level for Nifty that you're looking at. 18,600 is probably the stop loss and buy on dip strategy coming in for Bank Nifty. That's the word. But of course, we've seen participation coming in overall for the broader index. Midcap index too is around that all-time high level. Does that scare you a little bit when even broader indices start participating, or you think the bull run seems to be intact, and even these broader indices, something in small cap and mid cap, continues to do well? What's your assessment on that?
So definitely Nifty mid-cap and small cap both are showing good strength. That giving us confidence. Yes, it's a broad base rally, and rally is going to intact very much as the most of the quality mid-cap, small cap have started performing, and we have seen a significant rally in both the segment. So we do believe yes, this mid-cap and small cap can scale up further higher, and this time we are projecting that small cap can do well, and a lot of buying interest is there. So we do believe that small cap index can outperform to this benchmark index with a wide margin. So one can focus on mid cap, small cap space, and that space is going to give good return in the near term basis.
All right. So apart from that, there is a new listing which is coming in, Core Digital there, which is up on NSE for grabs. You can check the ticker on NSE. But Rajesh, at this point of time, your three recommendation and what looks attractive on the chart and are profitable bets for our viewers out there.
The first stock is from FMCG pack, and that is McDowell. In the previous session, we have seen long built up was there. Almost stock is now penetrating to its multiple supply zone on the daily weekly setup. So looking at the setup, we believe that McDowell can continue further more upside. 930, 940 target we are projecting in the near term. One can buy with stop loss of 878. Another stock is from pharma space, and Aurobindo Pharma is clearly outperforming. And looking at the overall setup for Aurobindo Pharma, this is the fourth consecutive week where the stock is forming higher high-low formation. So it clearly suggests that strength is there, sustained trend is there. So Aurobindo Pharma is another stock where we are projecting target of 698 to 705. Keep stop loss of 668. And the third stock is from banking space, that is Bandhan Bank. In the previous session, some corrective action was there, but from the lower level, again, recovery trend is taking place. The stock is trading near to its important support area of 255. So risk to reward ratio is very favorable for Bandhan Bank, and as whole banking sector is performing now, and we do believe that this banking financial sector can do well in the near term. Bandhan Bank is a buy with stop loss of 254. Upside target is 274.
All right, so that's the word. McDowell's, you have Aurobindo Pharma and Bandhan Bank. These are the three calls that are coming from Rajesh this morning. We're going to be addressing in stocks and news. RIL, Adani, Kotak Mahindra Bank, Zydus, Lifesciences, Anupam, Rasayan, India. That's also an important one, and there's a bit of development coming in for Zydus Enterprises. These are going to be some of the stocks that we're going to be talking this morning. Adani Enterprises, well, this is the one which needs a bit of attention out there. The group is in talk with various lenders, including Global Bank, which seeks to refinance for its acquisition of Ambuja Cements. The company has taken up close to $3.8 billion of loan facility for this acquisition. So do keep an eye out on this one. It's a fundraise plan which has come after a long time after the Hindenburg report. Reliance Industries, where the company has withdrawn the process of Reliance New Energy merger with the flagship entity. The company's board decided that the renewable energy business would be undertaken now with renewable new energy. That's the word coming in for Reliance Industries. Zydus Lifesciences, a positive development coming in for this one. Zero observation issued for company's injectable manufacturing facility in Ahmedabad. Now, the facility underwent US FDA inspection during June 5th and June 13th. So that's the word coming in, and a positive development rather coming in for this one. Anupam, Rasayan, India. Keep an eye out on this one. The company has signed in an LOI worth around 2,186 crore with a Japanese specialty chemical company. Mostly, you've seen these three stocks which are expected to be in focus, but let's concentrate on the markets opening right now. Nifty 50, we're looking at a positive start coming in for the markets. 18,700 level. That's the level that we're looking at. And Bank Nifty too. We are seeing gains coming in to an extent of 0.2% out there. And talk about private bank also. It's been doing well. Also talk about the broader indices for that matter, just to see if you're seeing that outperformance coming in for the markets right now. So small cap index and the mid cap index, yes, we are seeing that mid cap index is doing rather well, scaling new highs day after day, and small cap index too is not acting any different, up with gains of around 0.3% out there. Sectoral indices too. Auto index, shining bright. Pharma index has been holding up in green for you with gains of 0.25% out there. And talk about other sectoral indices that we have on the list right now. Something in the likes of IT. Now that's the one which is probably warranting some amount of caution. Persistent system, there's a downgrade which has come in on that one. 0.2% lost on the IT basket ahead of more of data coming in from the US. But auto overall, if you see that index, that's been shining in green for you. Talk about the other sectoral indices that we have on the chart right now. Pharma index has been doing well, auto index has been doing well, and if you look at the losing side, we have IT right now, which seems to be the loser. Rate sensitive realty index, well, that's the one which is probably holding some traction out there. 0.75% of gains coming in for real estate index. Metal index, well, yes, that's where the outperformance is clearly coming in. The slew of macroeconomic data across the globe is right now buoying the sentiment for metal index, which probably is holding in green with gains of more than 1% coming in. Advances 32 versus declines 16, and unchanged stocks remain to an extent of 2. So market breadth right now is in the favor of advances. And if you talk about the top gainers, JSW Steel, Axis Bank, Apollo Hospitals, these are some of the top gainers that we have on the list right now. Tata Motors, Hero MotoCorp, NTPC. These are some of the other top gainers that we have on the list right now. Talk about the top losers that we have on the screen. Kotak Mahindra Bank and Tech Mahindra. Coal India too seems to be down and out in today's session. Bharti Airtel, Wipro and TCS. These are some of the other losers that we have on the list right now. Well, there's a report which has come in on persistent system. It's by JP Morgan, where the stock has been downgraded to underweight and the target price to an extent of 4,100. The earnings has been slashed by 3 to 4% for FY24-26, driven by revenue cuts. And similarly, there is a lot of concern, right now brewing around the entire global setup. And IT basket at this point of time is not holding up. But persistent system, that's the one that you need to keep in mind. In today's session, it's been beaten down in trade. JP Morgan overall has reiterated a negative stance coming in for the entire IT service universe and expects every IT service firm to disappoint street expectation in the Q1 and the current second half of the financial year in terms of the growth expectation. That's a strong stance, doubling up on the kind of negativity that overall the brokerage has on IT sector. Sure, it's a good day for markets, but not typically for the IT index. Like you saw, that's the index which is probably beaten down in trade. Kotak Institutional has also come up on report on metals, but metal is the index which is shining in bright and in green with gains of around 1% out there. It remains cautious and has maintained sell on Nalco and Vedanta out there. Rajesh, I'm going to come back to you. It's a splendid opening for markets out there. Third consecutive session of gains coming in for Indian equity markets. What do you make out of it? What's your stance right now, and what do you think about the IT stocks right now?
So index is muted at the current level, and stock specific action is there. So defense stocks are showing good strength after this opening. So HAL is on radar. Looking at the setup, we believe that HAL can continue for the more upside, and the overall setup for HAL, Hindustan Aeronautical, is on the bullish side. So we expect target of 3,800 to 3,850. One can buy this stock with stop loss of 3670, and another stock which we like at the current juncture, that is GAIL. GAIL is giving a breakout of its consolidation zone on the daily chart. And looking at the setup, we expect GAIL to continue for the more upside towards 112 to 115. One can buy this stock with stop loss of 105. As you mentioned about IT stocks, we still believe that some consolidation action is going to continue for most of the IT stocks. Some profit taking is happening on the higher side. So still resistance and supply areas are still very much intact for most of the large cap IT stocks. So if we analyze the setup for TCS, till the stock not crosses about 300 level, whatever pullbacks we are getting on the higher side will meet to the supply pressure. So still at this moment, we are avoiding especially large cap IT stocks. Yes, some mid cap IT stocks are performing. The stock like Persistent, Birla Soft, these all stocks are looking attractive, and the near term, short term setup for some of the mid cap IT stocks are still attractive. But large cap IT stocks we are avoiding at this moment. One can remain long on the Coforge, LTI Mindtree, as well as Persistent and Birla Soft. These all stocks are looking attractive on the technical setup.
All right, Rajesh, thank you so much for those views. We're just going to leave it at that, and we're going to be addressing in the fundamental side of the story. Too much to be spoken about. The markets have been doing rather well. Third consecutive session of gains, hovering around that record high level. Needs to be checked. It's actually scaled in one of those levels. But right now, we're being joined by Prakash Diwan, the market expert out there, who will take us through the fundamentals, especially when the markets have been doing well and ahead of FOMC meeting, the outcome, which is going to set the tone for the markets. Good morning there.
Good morning. Good morning, Nicky. Good to be on the show.
It's absolutely good session of trade coming in for markets right now. You can sense the optimism not just for the broader, overall the larger counterparts. You can see it across the board, spirited participation when it comes to the optimism. Amidst all of this, it's a very broad-based question that I'm going to pose. What do you think looks attractive? Where is the value buying right now? Where do you think, apart from financials, of course, that's been the one which has been the flavor of the season. Talk about the pockets which seem to be underpenetrated right now.
So, Nicky, we are in a little bit of a sweet spot in that sense where data from global markets is kind of turning positive. There's a very strong probability that you'll probably see a pause. But of course, that doesn't really mean that the Fed does not have any potential to disappoint or sound more hawkish than dovish. So there are lots of ifs and buts that could still come. But the way the mid-cap, small-cap indices have rallied, it very clearly tells you that there is interest in the broader markets, even if the institutional activity on the Nifty stocks or the larger stocks is a bit muted, has been a bit muted in terms of quantum of flows. But, interestingly, the markets are now telling you that while they could see new highs on the Nifty very soon, given the kind of momentum that's building up, you got to be cautious, and definitely it may not hurt to take profits off the table in some of these stocks that have run up a bit too sharply. I mean, I know of some small cap, mid cap stocks which are quite popular amongst retail investors, which have done 50-60% YTD, and then that's like quite telling. The areas where you would probably still be able to scout for value, Nicky, are very few. To be honest, if you were to look at sectors, there are very few sectors where you'll probably see across the board undervaluations because of the kind of quality names being chased by all this money. But you'd probably look at it would be better off to do a bottom-up approach where you'd see stocks which are doing well, maybe if the sector itself isn't in great shape or hasn't yet kind of revved up. But then there are some nuances around these names which make them slightly better, and you're not overpaying for it given the fact that growth has just begun. So, I think you'll have to base it on earnings expectations and those valuations that you're getting these stocks at the current juncture. And there are very few on that. So I must tell you, there's not a long list of stocks that we also kind of found very attractive to screen, but whichever ones are looking promising probably are the ones that you could probably latch on to or start adding to the portfolio.
Prakash, which are the stocks you think need to be latched on right now? And given that they're valuable bets, Nifty right now is near about 100 points away from a lifetime high level. Amidst optimism as great as this, what do you think would be the bets?
Yeah, so, we are bottom-up investors in any case. And the way I look at some of these companies which have unique moats and business models which are difficult to replicate. And in these times, you'd have to go with that rather than something which is growing just because of momentum. So one of the stocks that we recently kind of discovered and worked upon is a company called Manorama Industries. Not something which you hear very often. The name also doesn't tell you what the business is, but it's one of its kind in India, and it's one of the few global players that is in the business of using seeds, organic seeds, seeds from flowers, natural flowers, to convert into what is called cocoa butter equivalent. Its abbreviated form is CBE. Now, CBE is something which has started growing very rapidly globally as a ingredient that goes into making chocolates, confectionery, cosmetics, a lot of pharma products. And the reason is very simple. Cocoa shortages globally are making people find ways and means to substitute that with something which still gives you the texture, still gives you the. So it's a small company, 1,800 odd crores. But it's had a stellar history in that sense. From the IPO stage, it's already 10x. The interesting part about this small cap company, micro cap company, is that there are very few players globally who have mastered this process. They collect sal seeds, they collect mango seeds, they collect shea seeds and convert those into, process those, refine those into butter equivalent, cocoa butter equivalent. And it's a complex thing. So they've just added capacities. Our belief is that this quarter, the quarter gone by, they reported very decent profits, a very good improvement in revenue, and the kind of demand outlook is so positive for them. They could probably continue to grow very rapidly from here on as well, given how the capacity and the demand is matching. So our belief is that the next 3-4 years, they'll be able to scale up significantly to at least about 2.5, 3x of where they are, and which means that you potentially have something which gives you much better returns than market averages.
Sure, Manorama Industry, a couple of negatives that the viewers need to price in before going and lapping up probably this investment. The stock right now has been trading at a book value of more than 6 times. It has a low return of equity of 11% over the last 3 years. Might be capitalizing the interest cost, and the dividend payout has been low, and the promoter holding notably has been decreasing over the last 3 years coming in for this one. That's a little bit of balanced view coming in, but of course these are the experts out there and they've explained to the line of business. The disclosure completely lies whether you go ahead and research these particular companies before lapping them up. But anything from the, apart from the broader, from the frontline index that you like?
So, I think the way the government, the PSU pack is kind of shaping up, Nickey, you've seen, some of the strong franchises that are majorly owned by the government are the ones that are kind of, doing extremely well in terms of, riding on this capex wave that we've seen. And one company from that perspective is Engineers India Limited. It's a company that everybody has heard of, is familiar with, and it's been around for a long time, but it's had its ups and downs. But today, if you see the space that it is in, the project management consultancy that they render, those services are something which are extremely valuable for all the new capex that's coming up, whether it's in the hydrocarbon sector, whether it's in the steel sector, whether it's in the cement sector. So, there's a lot of private capex that's finally trickling in into these core sectors. I mean, we all the time we keep on seeing people adding to mining capacities, to refining capacities, to steel making capacity. Now, all that is something where there is a portion of it which keeps on coming to EIL, given its core expertise in advising and in rendering these services to new projects. EIL has notched a very good revenue this year. Last year, the year gone by, I think it was one of the highest in the last 4-5 years. They've kind of recovered themselves from the slowdown of the pandemic era. And if you see the kind of it's a balance sheet which is very healthy. They really don't need too much of debt, and they don't have any debt on the books. My sense is the kind of return ratios that they've started coming back to over the last 2-3 years, there was a little bit of a slow growth. And now, if this keeps on going in the order book, the way they're looking at, in fact, the revenue of 3,000 crores odd, which they clocked last year, is just a very small fraction of the order book that they sit on. It's probably 1/3 of what they could do this year. So, and it's a long-term thing. It's not something which they do only for a couple of quarters and then there's a lull. These orders keep on growing as the income keeps on growing. I'm sure there's a lot of value addition element that they've worked on. So there is an element of growth. There's an element of superior risk reward, because at this point, I don't think at 6,000 odd crores of market cap, it's too big a company to be worried about in terms of what happens if it slows down. so it just started to grow. It's boring. The business is boring, as I said earlier. It's not something very exciting. There's nothing new out there. But you need these services, even if you were to set up very significant, a new capex by any of these underlying industries. So we love the business given the kind of spread it has, the kind of runway it has, and I think it has amazingly superior execution skills as they've demonstrated. So there you have something where the government owns quite a bit of the equity, the underlying projects which they have. The order book is so healthy, and they've been able to maintain very decent margins last year, which will continue, is my sense.
Point well taken. Engineers India is almost a company which is debt-free and has been maintaining a healthy dividend payout of 71%. Of course, slew of positive coming in on this one as well. But Prakash, what I would also want to chat about is the Pranam scheme. Cabinet is going to be talking about that and is likely to approve that in a meeting today. And this is the scheme where the government will be emphasizing reducing the chemical fertilizer subsidies. That's the exclusive report that we have from CNBC Awaaz. With that in perspective, do you think any stocks that one need to keep and watch ahead of this scheme or while these schemes have been approved, which will be the major beneficiary?
So that's an interesting pocket, and I think the step that the government is likely to crystallize is more in line with the kind of roadmap that they had outlined earlier. And if we were to kind of move to a subsidy-free or a rationalized subsidy regime, this was bound to happen, and most of the stocks have probably got this discounted or priced in. So there's really not much of a trigger that will happen beyond that, except for a conclusion of something which was an overhang. Now, from a fertilizer chemicals perspective, if you see the ones that have very clear salience in terms of their product strength and the brand strength, so you have the likes of Deepak Nitrite, you have the likes of GSFC, you have the likes of RCF, you have these are names that FSCT for that matter. These are names that continue to build strengths given the huge capacities and the kind of runway that they have. I mean, they don't really need to change their business model or tweak it in this. And if the monsoon is even close to normal, I think the kind of demand that you'll see for agri-produce is going to be stupendous. There is so much of mechanization, there's so much of modernization that's happening in that industry that typically you'll probably see this as very correlated. Sales of fertilizers and chemicals and inputs largely are very strongly correlated to the kind of level of mechanization and growth that is there. And of course, I think the best pick out there would be GSFC. You've got a dividend built into that. You have a very strong balance sheet with so much of cash. They almost have about 2,600 crores cash and cash equivalents on a market cap, which is hardly, just twice of that. So, you have a safety net of sorts built into some of these companies given their structure. But I would definitely look at some of these names. Be selective. Don't buy any fertilizer name just because there is a change that's happening. But I think the likes of GSFC will probably add to the salience of the portfolio, given the fact that they are in a position after the Gujarat government's revised policy on dividend payouts that there will be an incremental gain in terms of the stock price appreciation as well over the next couple of years.
All right, that's the word coming in, and the stock that will be its focus is Gujarat State Fertilizers and Chemicals. A couple of things have been going right for the company. It has reduced debt. Now it's a debt-free company. It's been trading at a low valuation. Talk about the profit growth for the last couple of years. They've been doing well, and it's been maintaining a healthy dividend payout overall. Prakash, on a parting note, FOMC meeting, that's the one where all eyes will be on, of course, and it will dictate perhaps the trend even of Indian equity markets. You think that could be a party pooper of any sorts, given that market right now 91% odds of a particular expectation? If it's against that, do you think that will be a party pooper in any way where the direction can be changed? What do you think of? What do you make out of it?
I wish I knew. I would have definitely made some great money if we could get that right. But, anecdotally, every time we go into events like this with a fairly long build up, there's always something which might be amiss in terms of expectation. I mean, while there is a very clear indication that the Fed will pause on the interest rate cycle, there could be some sort of hawkishness which the market might not probably be digesting or might not be anticipating at this point. So if that were to happen, and the worry in the US is beyond the Fed now. At this point, I think the epicenter of most of the problems are on the commercial real estate slowdown. I mean, if those the office space rentals are any indication, demand is any indication, a lot of the banks which have that in their underlying portfolio would be going through a severe bout of stress. So that's where there's a larger worry. But I don't think the market is in a mood to listen to any disappointments at this point in time. So you will probably see markets gallop ahead, even if it's close to expectation, not exactly as per expectations.
All right. So right now, if I'm just supposed to do a market check, all of the gains have been given up, Prakash, at this point of time. We're trading still holding around that 18,700 mark, and like you said, that's what needs to come out. What probably will come out, a little bit of disappointment also will probably not go down well with the markets, and that could be a course where the direction could reverse otherwise. But Prakash, thank you so much for joining us. With this, it's a wrap, and goodbye from the entire team who puts this speech together. Thank you so much for watching. In a remarkable milestone, we have crossed 10,000 viewers out there for the daily basis. But thank you so much for tuning in, and please do keep showering in that love and post your feedback for us in the comment section below. Follow us from the link at the bottom of your screen, and for rest of the updates, stay tuned into moneycontrol.com and Moneycontrol app.